What's up, YouTube? Eric here, Mr. Fired Up Wealth. It's the end of the month. It's a new month, September 2021. So I know what you're doing. You're looking, what stock should I buy now? What stock should I buy September 2021? I've got you covered. I got your back. I got 3 stocks here that I think are decently priced, even at these levels with the markets at all-time highs. You're going to want to check this one out. Stay tuned. All right, guys, first up, Zillow Group. Now, this is one I did an article and a video on for the Motley Fool. Here's the article right in front of you. And I really do like a few different stocks in this space. You know, you can look at Opendoor. I think Opendoor is actually beat down pretty hard as well. The thing is, you know, it's a lot more speculative. I think even Zillow Group, you could probably put it in your spec bucket. But Redfin's another name you can check out. And, you know, they call this Zillow 2.0, their solution. And the goal is to create a radically simpler real estate transaction through technology, service, and integration. We talk about today's consumers, right? We want information at our fingertips. We want it easy. We want it fast. You think of things like Netflix, Uber, Lyft, Grubhub, DoorDash, Expedia, Airbnb, Carvana, all the ones mentioned there. The next logical step in that whole process is really real estate as a service, right? Having one-stop shop, an application I can go and I can sell my house. I can do everything, which Zillow, Opendoor, and Redfin really do. But the focus here is Zillow Group. It's under $100 a share. Now in this video, if you want a deeper dive, you can check this video out. And I go into about a 15 or 20 minute deeper dive on Zillow Group, and you can check that out. But in this video, I said I thought it was a buy, you know, under $100. It was basically a screaming buy. And we're under $100 now, trading around 95. I think it could go even lower. I think there's a chance that you can go in the 80s. And you would want a dollar cost average, but I do think Zillow Group is an opportunity below $100 as a long-term investment. All right, guys, number 2, do you like curveballs? I like throwing curveballs once in a while. This is one I've been buying in the Discord community. I really like this one in the $8 range. It has run up a little bit. It's trading closer to 10 right now. It's actually trading around $9.85 pre-market. The market cap on this is about 1.3 billion in that range. So this is a small cap. It's a riskier stock. Now, the interesting thing about this one, so a couple interesting things actually about Semiconductor. So David Aldrich, he's actually on the board of directors. He's an independent director. So Aldrich was the CEO from 1999 to 2015 for Skyworks. Listen to this, guys. He actually took their operating income and increased it by 7,477%. So he increased operating income by 7,477% over basically 15, 16 year period. He also took the revenue from 126 million to $3.6 billion. Okay, so that's the annual revenue. Annual revenue from 126 million, a very tiny company, to a $3.6 billion company. So he's got a lot of connections. He's been in the semiconductor industry basically for the last 2 decades. And it's not just him. There's other leadership that have a lot of ties to the industry as well. I'll get more to the leadership later on these slides, so definitely stay tuned for that. Another interesting thing is there's a hedge fund that you probably have heard of, a very famous investor, billionaire investor, who's also been buying this stock. Now, neither of these things are reasons for me to go run out and buy a stock, but it was a stock I already had done my due diligence on, had conviction on, and then discovered that these other investors were buying it as well. You know, David Aldrich, just about a week ago, I remember seeing he bought 75,000 more shares, if I remember correctly, 75,000 shares of Semiconductor. So he's putting his own money. He works for them. He's got skin in the game. And that doesn't make me necessarily want to go out running by the stock, but it does show me they're buying at these levels. They've got conviction. It helps give me additional conviction on something I already made a decision on. So Semiconductor, if you haven't heard of them, essentially, they're really trying to be this niche company that's focused on automotive, right? So when you think of autonomous driving, you think of electric vehicles, you know, there's a lot of great stocks in this sector already that kind of focus on that, but nobody really does it as a best of breed solo focus. You know, there's a lot of companies that have it as part of their business, but these guys are 100% dedicated to vehicles, right? Autonomous driving, electric vehicles. We're talking about semiconductors and equipment that goes into cars to basically make them safer, make them more efficient, and so on. So they're in the pursuit of an uncrashable car. Indie is standard and partner agnostic. What that means, if you listen to the CEO talk, they're focused on partners that really are also trying to be a niche vendor and really focus best of breed in specific areas. So their supply chain hasn't been affected quite as much as other semiconductor companies because of the fact they're dealing with smaller companies as well, and companies that are really focused on specific products that they need for their manufacturing. When you look at this, they're working with a lot of big vendors already. Now you can see this on the screen, and I've had questions about this. Are these actual customers? Now, other than this slide, which is an investor presentation from their website, there's nowhere else I can verify this information that I found, but one would assume that all these companies are companies that they're actually working with now. And there's some stats here I'll show you in a second that helps confirm that. But they're calling themselves best in class mixed signal SoC solutions, leveraging manufacturing technologies and proprietary packaging techniques to drive integration up and cost down, innovative product roadmaps. This is actually really powerful. So this is showing their scalability. They've already shipped 100 million devices into automotive tier one companies, so these large companies. And he's also increasing OEM penetration and content per vehicle. I'll get to a slide here in a second that reiterates that. But you can see from 2011, they've been around for a while. They just did a SPAC recently this year. And they, it's one of those things where a lot of SPACs have been beaten down, good and bad. I think this is one of the better ones. The question was asked to him, the CEO, why did you go the SPAC route versus traditional IPO? And the answer was essentially they wanted to expedite the process. They were going to do an IPO in 2022 or 2023, and they decided to expedite that process and do it sooner through a SPAC and not have to go through all the SEC regulations so that they could get the cash and invest it into research and development because they saw a bright future with semiconductors for automotive. This is one where the story makes sense. The leadership's really solid. They've got a lot of great experience. But you can see this is a disruptive megatrend. And I'm not an EV expert, but when I think of technology, semiconductors, software as a service, it's much easier for me to analyze a company like because it's a semiconductor company. Now, is there risk because it's a small cap? Absolutely. But this thing could be a home run. It could be one of those 10x plus stocks because it's small. And if they actually do what they say they're going to do and their business plan comes to fruition, watch out. This thing could be a monster in the future. So think about like parking itself, all the different things. So like I've got a Honda CRV. It's my wife's, right? But if I'm going to turn lanes, it'll warn me, it'll beep if there's a car next to me. If there's someone in front of me and I'm too close, it'll tell me to brake. That's the kind of stuff these guys are focused on. And not just those areas, but some of the areas they're focused on. So you look at this, they've got LiDAR integration. So you can see optical engine AI processors. This is really cool high-tech stuff that they're dealing with here. Seamless data connectivity. So they won pipeline for wireless charging, telematics, driver monitoring, cloud access. They also do work with Apple Car Key. They're doing work with charging controllers, diagnostic solutions. So this is kind of the nice wheel that shows you what they're really focused on, from telematics to LiDAR, wireless charging, car key, CarPlay, all these different things. Cybersecurity's in there, signal processing, bus bridging. So they're really trying to be this one-stop shop for what they call system on chip solutions for these large tier one automotive companies. Now they're showing here their total addressable market for Indy, right? And you can see electrification, safety systems, user experiences, connected car. It gives you an idea of where they think they can go. So right now they're saying they have a $16 billion total addressable market, or TAM, and their market cap is $1.3 billion. And they're saying that by 2025, so basically 4 years from now, $38 billion is their total addressable market. This is why they wanted to expedite and go to SPAC route, because they really wanted to focus on research and development to get in front of that curve. So if you're buying this stock, it's somewhat speculative because you're speculating that they're actually going to capture a lot of this market share and do the things that they're telling investors that they're going to do. They have to prove that. It's still an expensive stock. The growth, though, very, very strong. This video is focused on high growth stocks to buy in September. Now, their last quarter is 147% year-over-year revenue growth. Okay, so that's pretty impressive. 147% revenue growth. Of course, it's still expensive when you look at things like price to sales. This is the closest thing you can really get to investing in a startup company, guys. So there's risk here. Understand the risk, but there's a lot of upside as well. I like this stock if you can get it in the $8. Like I said, you might not get that opportunity again. It just was down in the 8s. Under $10 still seems reasonable. I'm going to show you another slide here in a second from a hedge fund, someone that you've probably heard of who's been buying this stock as well. So real quick, guys, this is on Guru Focus, and you can see, so George Soros, he has the Soros Fund Management LLC. He's a huge hedge fund guy, has been around for a long time, and you can look at all the different buys and sells on here. Now, what I want you to focus on, Indie Semiconductor. Okay, this was back in June, so this is the bad part when you follow these, and I normally don't buy or sell off these, but I do think it's very interesting because for being a small cap, it's interesting for me to see Soros buy this stock. So it was a new buy in June, okay, the end of June 2021. 2021. I'm assuming he still has it, but he could have sold it by now. But all we know is he did a new buy and he bought it at $9.87. Now the stock is trading right now at basically the same price. In fact, it's 2 cents less. So my guess is he probably still owns it. Current shares, 2.5 million shares. So to me, this is pretty interesting. I also noticed the other day that David Aldrich that we mentioned earlier, who was with Skyworks, he's a director for Indy. He bought 75,000 shares when the price was beat down. So, there's conviction in this. There's people that have a lot more experience than I do, or that you do probably in this industry, that are buying shares of Indy. And I like this stock under $10. I like it even more if you can get in the 8s. So this is an interesting slide. And this is where it goes into the speculation. They're saying that today, right? So you can say today, tomorrow, and the future. So the price per vehicle, this is silicon content gains. So right now they're saying there's about $310 per vehicle. And tomorrow, $975. In the future, they're saying that each vehicle is going to have $4,000 in basically semiconductor related equipment and semiconductors in these cars. So if that's true, this is the future. This is a company that could really blow up and can be huge in the future. Now, when you think of their management team, okay, look at your screen, guys. So you got Donald McClament. He actually is the CEO and director. He was with Skyworks. He was with Cirrus Logic. If you look at, so Keltec, you've got Rockwell Automation, Marvell, Skyworks again, Skyworks. A lot of these guys are from Skyworks, okay? Skyworks is a great company. Here's Broadcom. You've got Motorola. These guys have a lot of experience in the industry, and that does give me more conviction, knowing that the management's been around the block. They have relationships in this industry, and it's going to help them be successful. When you look at their independent directors, this is huge because David Aldrich is the person I was referring to earlier. Now, he owns shares. He's actually an independent director on the board. He basically helps guide Indy to be successful. But he was with Skyworks, and you've got all these other people as well that have a lot of great experience, a lot of great backgrounds. Quick snapshot of their global footprint. Stay tuned because I'm going to give you the third pick, but I'm going to show you one more thing on Indy. Here's a good summary. Differentiated semiconductor and software technology platform. That kind of paints a picture of what they're all about. Demonstrated success with leading automotive suppliers. 16 billion high growth, margin rich automotive SAM. Proven leadership team with decades of experience. That's really important for this one. When you think of SPACs, it's really going to be about the leadership. You have to have good leaderships for those to work, and well positioned to capitalize on Autotech megatrends. So you think of secular growth trends, this is a huge megatrend, and this stock could be a winner within that trend. All right, guys, the third one is Roku. Now, this is from August 4th, shareholder letter. They just had earnings. The earnings were good. There's a couple reasons why the stock pulled back, and I'll get to that here in a second. Now, the key results, net revenue up 81% year over year, $645 million. Platform revenue increased 117% year over year to $532 million. Gross profit up 130% year over year to $338 million. Active accounts reached 51.5 million, an increase of 1.5 million active accounts from Q1 2021. Streaming hours were 17.4 billion hours. That's a lot of hours. 17.4 billion hours. A decrease of 1 billion hours. A decrease. Oh no, it's summertime. I wonder why the hours are decreasing with streaming. And as COVID started to lift in certain areas as well. Average revenue per user, you see this a lot. ARPU grew $36.46, trailing 12-month basis, up 46% year over year. So what's the problem? Why did the stock pull back? Great question. Two reasons. Okay, so Roku stock, it was down 7%. So actually what happened, guys, if you look at the chart on this, right, I'm looking at a 1-month chart on my phone. This thing was trading at like $421 August 2nd, and now it's trading about $359. It looked at one point, it was at $343. It looked like it was going to go in the mid 330s, maybe even close to $300. But there are a lot of bulls on this stock, and they kind of came in and started buying it. So when you look at it right now, the market's red, and Roku's actually up 1%, trading at $359.49 right now. It looks like it might have found some sea legs, I call it, around that $340, $350 mark. But the reason it was down is that analysts were expecting 19.4 billion hours streamed, so we missed the mark there. And then there was also an issue with costs, with supply chain. You're hearing about inflation, things like that. So there was a shareholder letter that came out with earnings. And basically what it talked about was increased prices. So quote here, tight component supply conditions and shipping constraints. Okay, it's harder to get their hardware. That's one thing that can be looked at as a negative with Roku. It has the subscription type services. It has the streaming part of it, which is a huge megatrend as well. But it also has to rely on hardware more than, like a software as a service company. company would, because that's, all software and recurring revenue. In Q2, we insulated consumers from increased costs for Roku players, which resulted in player gross margin turning negative for the quarter. There's also some other news about one of their partnerships for Roku, pre-installed in TVs. They lost that partnership, yada, yada, yada. The Olympics weren't as good as they could have been, so the streaming hours are lower. So there's been some negative sentiment around this stock, but I do think it's an opportunity. I think if you can get the stock below $350, that as a long-term investor, it's probably an opportunity. I think eventually it gets up to $500 a share. I can't promise when, but 350 and under is what I'd be targeting. It's trading a little bit higher than that right now. If there's some kind of pullback in September, September is historically the worst month in the S&P since like 1945 on average, but maybe we have a broader sell-off and everything kind of gets sold off, and maybe Roku comes down for a day or two and we get an opportunity. That's what I would be looking for personally. So when I think of September, all these stocks, I'm talking about dollar cost averaging. So next, I'm going to give you my final thoughts. Stay tuned. So if these videos are helpful, a couple things, guys. Number one, go check out some other videos on the channel. I just completely revamped the entire homepage. I've got a bunch of new playlists, and it breaks it down because there's a lot of different things we cover on the channel, from personal finance to growth investing, dividend growth investing. But if you want just semiconductors, I've got a playlist for semiconductors. If you want mid-cap, I've got a playlist for mid-cap. You want cloud, there's a playlist for cloud. If you want just Motley Fool articles and Motley Fool videos, the ones that I did for the Motley Fool, I've got a playlist for that. So go check that out. I definitely encourage you to look at the new playlist. I think it's easier to find some of the content. I should have done a lot sooner, but it is, I call it Fired Up Wealth 3.0, and definitely go check that out. And I encourage you too to check out Patreon, check out Discord. Also Motley Fool, if you want to subscribe to Motley Fool, I've got a discounted offer, a link in the description. You can take a look at that and get a discounted offer through Fired Up Wealth. So there's lots of additional services. It's not just YouTube, and YouTube is completely free. In return, I just ask for, subscribers, likes, and comments. That's all I need. If you want to take your game another level, you've got the Motley Fool and you've got Fired Up Wealth, Patreon, and Discord. Definitely take a look at both of those. But we're growing this community in YouTube and Twitter, Facebook, Instagram, TikTok. Definitely follow at Fired Up Wealth in all formats. I appreciate your time and attention. Hope you have a great rest of your day. Take care.